Welcome to The Explainer. Today, we're digging into the key events that are gonna move the needle for markets in this first week of December. We've got some really conflicting signals from the big money players, global tensions are simmering, and there's a final push of data before the Fed makes its last big decision of the year. Okay, so let's just jump right in. If you're an investor, you are walking into a week of some serious contradictions. On one side, you have the smart money making some pretty bold bullish moves in crypto. But on the other side, you've got these global political situations that are really threatening to boil over and hit every single market. So who wins this tug of war? Let's unpack it. All right. First up, let's follow the money and see what the big institutions are up to in the crypto space. And we're going to start with some pretty strange activity over at the Chicago Mercantile Exchange, which is, the main playground for institutions. So get this. On Friday, the CME, the place institutions go to trade crypto derivatives, had this weird technical glitch. A cooling system failed, and it created a little price gap in Bitcoin futures. Now, gaps happen, and this one closed almost instantly, so that's not the real story. The key takeaway, the really telling part, is what happened next. Instead of freaking investors out, the open interest, which is just the total number of active contracts, it actually ticked up. That tells us that even with these little hiccups, the big money isn't just staying put. They're still very much in the game. Okay, this is where things get really interesting, especially if you look at the ETF flows. We're seeing a clear split in strategy from the giants. Money has been pouring out of Bitcoin ETFs, and one of the biggest sellers, the financial titan BlackRock. But then you look at Ethereum, and it's the complete opposite story. 5 straight days of money flowing in. And guess who one of the major buyers has been? Yep, BlackRock. So what's the play here? Are they taking some short-term profit on Bitcoin while placing a much longer-term bet on Ethereum? It's a fascinating split to watch. And it's a similar kind of story when you look at corporate balance sheets. For Bitcoin, the confidence seems really broad. 8 major companies added more to their treasuries. But for Ethereum, it's a different picture. It's a highly concentrated bet. The growth is almost all coming from one single massive player, Bitmain, and they're just scooping up ETH like there's no tomorrow. So yeah, Ethereum's corporate support is strong, but it's not wide, which makes it a bit more dependent on what that one key company decides to do. So beyond where the big money is going, there are 2 key technical events on the crypto horizon this week that could have a really direct impact on supply and, of course, price. So here's a huge change from how things used to be. There's a pretty significant Ethereum network update happening this week, on December 3rd, and it is flying completely under the radar. I mean, a few years ago, an upgrade like this would have been massive headline news, right? Countdown clocks, parties, the whole thing. This time, crickets. It's almost silent, which is a really curious shift in how the market feels about one of its biggest assets. Now let's talk supply. A whole wave of token unlocks is happening this week. Basically, this is when a ton of tokens that were locked away for early investors or the project team finally get released onto the open market. And we've got 7 major projects doing this. Now, while it's a drop in the ocean for the entire crypto market, if you hold any of these specific assets, it's a sudden, massive increase in the number of tokens available to be sold. And this brings us to the million-dollar question for anyone holding these assets. Is this new supply going to be fuel for growth, or is it just a ton of sell pressure waiting to happen? Are the teams going to reinvest this money, or are the early insiders finally about to cash out? The answer to that is going to have a very real impact on the price. Okay, let's zoom out from crypto for a minute, because there are 2 major geopolitical events that could send shockwaves across all the markets this week. These are the kinds of wildcards that can just throw any chart or fundamental analysis right out the window. First up, down in South America, things are getting tense. The U.S. has closed Venezuelan airspace. That's a big step up, and it's got markets on edge. Why? Because historically, even the threat of a military conflict is a classic risk-off signal. It means investors get scared, they dump risky things like stocks and crypto, and they run for the perceived safety of things like gold or the U.S. dollar. And then, back here in the U.S., there's this huge battle over presidential power and tariffs that is really coming to a head. The Supreme Court is deciding whether a president can just impose tariffs all on their own, and you have former President Trump putting very public pressure on the court with statements like this one. This Supreme Court decision is a genuine ticking time bomb for market volatility. I mean, on one hand, if they rule that a president can do this, you could see an immediate shockwave rip through global trade. On the other hand, some people argue that tariffs could maybe help fight inflation long term. But really, at its core, this is about the limits of presidential power. And if there's one thing markets absolutely hate, it's that kind of uncertainty. And finally, we have to talk about the elephant in the room for every single market, the Federal Reserve. All eyes are on them and the key data that's going to drive their last interest rate decision of the year. With all this geopolitical noise going on, this is what the Fed is actually focused on. Now, Fed Chair Jerome Powell is scheduled to speak on Tuesday, but don't hold your breath for any fireworks. He's in the Fed's blackout period, which basically means they're not allowed to give any hints about monetary policy right before a meeting. So the real story this week isn't what the Fed says, it's about the data they see. And this right here, this is the number the Fed is absolutely obsessed with, core PCE. It's their favorite way to measure inflation. The new report comes out Friday, and the forecast shows inflation just stuck. It's holding steady at just under 3%. And this really shows the Fed's problem, right? Inflation isn't getting worse, but it is stubbornly high, and it's still a long way from that 2% goalpost. So you have to remember, while inflation gets all the headlines, the Fed is looking at a whole dashboard of economic data. And right now, that dashboard is just flashing all sorts of mixed signals. The labor market is a perfect example. Yeah, we're seeing job growth, but it's all concentrated in just a few areas. And at the same time, the unemployment rate is at a 4-year high. A flood of new data this week is going to give them a clearer picture, but it's probably still going to be a complicated one. And that leaves us with the ultimate question for the week ahead. What's going to drive the markets? Is it going to be the quiet, fundamental signals from the economic data, or is it going to be the loud, dramatic headlines from the political stage that cause a sudden shock? The answer to that is probably going to set the tone for the entire rest of the year.